Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NOBLE CORP PLC quarterly report. NOBLE Corporation PLC offers a range of businesses and services to the oil and gas industry worldwide. The company's primary service is contract drilling through its fleet of mobile offshore drilling units, including floaters and jackups. This comprehensive offering enables NOBLE Corporation PLC to cater to various needs of the industry, making it a key player in the sector. The decline of NOBLE Corporation PLC stock price. NOBLE Corporation PLC's stock has experienced a significant decline over the past year, with a decrease of -7.86%. This is not due to a lack of market forces or company-specific news, but rather the opposite. The company's stock price fluctuated widely during the 52-week period, ranging from $17.40 to $35.98. Various factors have contributed to this decline, including market trends and significant events affecting the company. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary provided. On the growth side, contract drilling services revenue increased by $8,580,000 in 2025 due to the amortization of liabilities and off-market customer contract liabilities recognized in connection with the Diamond transaction. Additionally, reimbursables and other revenue grew by +10% from 2024 to 2025, while floaters revenue also saw an increase. On the decline side, jackups revenue decreased due to a net change in operating days and a decrease in average day rates for jackups. This resulted in a decline of $30,965 in 2025 compared to 2024. Overall, these factors contributed to a 19% increase in operating revenues from 2024 to 2025, with the majority of growth coming from contract drilling services and floaters revenue. Net income and profit margins experienced significant fluctuations. The net income of the company has undergone a drastic change in recent quarters. In Q3 2025, it decreased significantly from $61,216 in Q3 2024 to -$21,095, resulting in a decline of $82.3 million. However, on a year-to-date YTD basis, net income increased from $351,705 in YTD 2024 to $130,080, indicating a decrease of $221,625,000. Profit margins have also experienced fluctuations. The operating income margin decreased from 14.5% in Q3 2024 to 6.2% in Q3 2025, while the net income margin dropped from 7.8% to -2.6%. On a YTD basis, however, the operating income margin increased from 20.5% to 14.7%, and the net income margin rose from 16.5% to 5.1%. The primary reason for these changes is attributed to decreased rig utilization, lower day rates, and increased operating costs and expenses. The average rig utilization declined by 15 percentage points, resulting in a decrease of 294 operating days. Additionally, day rates for floaters and the total fleet decreased, contributing to the decline in net income and profit margins. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. The net cash provided by operating activities has increased from $519.3 million in 2024 to $764.6 million in 2025, demonstrating a substantial growth of $245.3 million. This upward trend suggests that the company is efficiently managing its operations and generating sufficient cash to support its business needs. The company's debt level has experienced significant fluctuations. Initially, long-term debt decreased from $2,032,977 in 2024 to $1,980,186 in 2025. However, this trend was reversed with an increase of $1.2 billion due to the issuance of new senior notes in August 2024. Consequently, total debt rose from $1,401,040 in 2025 to $1,976,919. Interest expenses have also undergone a notable change, increasing from $54.5 million in 2024 to $121 million in 2025. This significant rise suggests that the company is now paying more for its debt obligations. The estimated fair value of interest expenses also increased by $34,572, further indicating an upward trend in interest expenses. Management's outlook on company strategy. The company's management expects to maintain financial stability over the next few years by managing debt. They are optimistic about the long-term outlook for offshore drilling services, driven by supportive oil prices and increasing demand. To improve efficiency and reduce costs, they aim to secure longer-term contracts. However, they acknowledge that market conditions such as labor shortages, capital-intensive maintenance scopes, and geopolitical crises can impact operations and costs. Management plans to fund their cash flow needs through a combination of operational cash generation, asset sales, and borrowings under the 2023 revolving credit facility. When evaluating potential acquisitions, they will prioritize liquidity and preservation of capital. Overall, management is focused on maintaining financial stability while positioning the company for long-term growth in a positive market outlook. The company's financial summary reveals that it has engaged in two key shareholder return strategies. Firstly, the company has paid dividends to its shareholders, as indicated on pages 9, 11, and 12 of the report. This demonstrates a commitment to distributing profits to investors. Secondly, the company has also bought back shares, as mentioned on page 9. This action allows the company to reduce its outstanding share count and potentially boost earnings per share for remaining shareholders. That concludes the financial summary for Noble CORP plc. Feel free to comment below, and I will be happy to answer them when possible.